in terms of regulation, to put longer-term stopgaps in place? What would you like to see now?
I'd like to see the regulators go in and actually have a little more understanding of the real risk. One of the problems that we have is that regulators often live in an ivory tower, have a checkbox, and they just run through certain things, and they don't think about risk in the way a trader would. So when I look at a fixed income, fixed interest rate risk is one of the biggest risks you could ever have. For them not to notice that in what was an S&P 500 company is just insane.
What about the auditors? I mean, whenever we have a bit of a banking crisis, the auditors are always called into question as well. Will they be people under the microscope?
Yes and no. I mean, auditors are looking a long way back. So
rating services as well.
I mean, again, and raters. I was comprising distressed debt in New York in the 1990s. So credit agencies are not as in depth as like to believe. You can pull the wool over their eyes. The regulators shouldn't be able to. They're supposed to go in and just be able to look in at any file and start to really rummage through things. And that doesn't happen. So from my perspective, it's not necessarily the laws that are in place. It's the enactment of the existing laws. So there's enough regulation to stop this thing happening. But regulators don't walk in with the gravitas and the power that they want. And that's a problem.
What about the speed at which everyone has responded to this? Congress Zoom calls on a Sunday afternoon, all-night talks with the UK PM, the Bank of England, and a deal within 24 hours for the UK arm to try and reassure UK tech firms and the wider banking economy. Have we learnt from 2008 what needs to happen about speed? 100%.
No, the speed that everything happened, you've got to take your hat off on that respect. So the blame game has started, but they mopped up the mess very, very quickly. So the Fed, the actions that they took, I was completely surprised. So Circle had $3 billion with them, and we saw the price of a stable coin, which is supposed to be $1, collapse down to like 90 cents because people were petrified about what was going to happen with their SVB deposits. The speed has meant that the fallout should be less. The impact on portfolio companies of a whole bunch of venture funds will be smoothed out. And the most important thing is we should not see the complete raft of failures that not having access to your money may have caused.
Right, super quickly, 20 seconds. Globally, how far could this go?
Well, again, the rubbing the crystal ball, I actually don't think it's going to go very far. I think this is going to be contained quite quickly within the US. Obviously, the UK had a bit of an impact. EU, there's virtually no impact to SVB at all. So I think give it a couple of days and it should have blown over. But this is a huge bank failure. It's exciting.
Do you think it will impact the Fed rate decision?
Absolutely. There is no way they're cutting rates by the end of this year, and also they are not going to hike by 50 basis points. It's too much for stress for the system.
Thank you so much for joining us this morning with that insight. Simon Fentham-Fletcher, the CIO of Freedom Asset Management, speaking to us there about what we have seen in the last 48 hours coming out, not just from the US, but from the UK as well, in response to the collapse